Okay, settle in. This part of the claim form, financial details, is the longest section. You'll be asked for quite a bit of detail. Remember, your progress is saved as you go, so you can take a break at any time. Financial details includes information about your savings and investments, and also your income and your assets. In this video, we'll cover the questions about savings and investments, and in the next video, we'll cover income and assets. But first, you're asked to provide the bank account details where you would like your pension to be paid, as well as your tax file number. Your TFN is needed because the age pension is treated as a taxable payment. Centrelink doesn't automatically withhold tax from the age pension, so you can choose to have tax deducted from payments if it suits you. It's an important consideration if you receive other income, like casual or intermittent work, or from investments. Not sure how much to withhold? Check the ATO tax brackets for guidance. If you no longer need to lodge a tax return, you can answer no to this question. Next is all about savings you have outside of super. That's all banking accounts you have, so cheque accounts, term deposits, and joint accounts. Next come investments, which includes shares and managed investments you may have. The first investment you're asked about is super. If you're not overly familiar with how super works, this question can understandably cause confusion. To clarify, superannuation funds hold your money in either an accumulation or a retirement account. For Aware Super members, your future saver account is an accumulation account. If you no longer have an accumulation account and only have a super retirement account that pays you a regular income, don't include it here and answer no. For Aware members, that's your retirement income account. These can often be confused with retirement savings account, which are held with a bank, credit union, or building society, and not with the super fund. If you have a bank retirement savings account, which is different to a regular bank account, answer yes to this question. If you have super with more than one fund, you need to include all savings or accumulation accounts. You're asked to provide a SPIN or SPIN, which is a unique number to each fund. The Aware Super SPIN is included on our downloadable checklist, but it's also available on the website. Here, at the income stream products question, if you are with Aware Super and you get regular payments from a retirement income account, answer yes. Next, Centrelink asks about any shares or managed investments that you or your partner have, and that includes investments specific for funeral costs. The question about money borrowed in the last 90 days does not include your home loan, if you have one. Next is gifting. It includes giving away cash, property, or selling something for less than it's worth. For the age pension assessment, there's a limit to how much we can gift. Individuals and couples combined can gift up to $10,000 a year, up to $30,000 over a 5 financial year period, and remain within the gifting free cap. Any amounts gifted over this limit will be counted as an asset under the pensions asset test, as well as deemed under the income test. However, if you have gifted below the limits, you still need to let Centrelink know so they can keep a running total. For more information on the income and asset test, including what is deemed income, click the link on screen or head to Learn on Aware Super. If you have a business or a family trust, the next series of questions asks for those details. If you own property that is not the home that you live in, even if it's overseas, you're required to tell Centrelink about it. The first few questions cover the type and size of the property and land title and strata details. The question regarding water rights is only relevant to some regional and farm properties. So if you receive rental income from property that you own, Centrelink asks for the gross amount. So that's before tax and expenses are taken out. If you carry a mortgage on an investment property, declaring it can help offset and reduce some of the investment property's value, which in turn can help how much pension you're entitled to. Next up, We look at assets and income.